ASML has just reported its Q4 and full year 2025 results, and these earnings clearly confirm one thing. The semiconductor industry remains extremely strong, mainly driven by the massive adoption of artificial intelligence across more and more applications. ASML highlights that the semiconductor industry is expected to surpass $1 trillion in revenue by 2030, with AI being the main growth engine. At the same time, the company points out that future innovation will require major breakthroughs to address power consumption and cost challenges related to AI chips. Lithography remains at the core of customer innovation, with an increasing number of critical lithography steps needed for advanced logic and memory. ASML's portfolio is positioned to support all customer needs, from improving DUV and EUV performance to enabling 3D integration. Looking ahead to 2030, ASML sees an opportunity to reach annual revenues between 44 and 60 billion euros, with gross margins between 56 and 60%. The company also reiterates its strong commitment to ESG leadership and to returning significant cash to shareholders through dividends and buybacks. Let's now move into the business overview, starting with ASML's overall performance. In the fourth quarter of 2025, ASML reported total net sales of 9.7 billion euros. System sales accounted for 7.6 billion euros, while install base management contributed to 0.1 billion euros. Gross margin came in at 52.2%, with an operating margin of 35.3%. Net income represented 29% of total net sales, resulting in earnings per share of 7.35 euros. Net bookings were particularly strong at 13.2 billion euros, with EUV bookings alone reaching 7.4 billion euros. Full year 2025 was strong for ASML. Net sales reached 32.7 billion euros, with a gross margin above 52%. EUV systems were the key driver, growing almost 40% year over year, while recurring revenues kept gaining weight. ASML also returned 8.5 billion euros to shareholders through buybacks and dividends. This section focuses on net system sales, both on a quarterly and a full-year basis, and it gives us a very clear picture of how ASML's business is evolving. Starting with the quarterly breakdown, we can see how sales fluctuate depending on customer investment cycles. EUV systems remain the most important contributor, but they tend to be lumpy, meaning that revenues can vary from quarter to quarter depending on delivery timing. DUV systems, on the other hand, show a more stable pattern, helping smooth out short-term volatility. What's important here is that even when quarterly numbers move around, demand for advanced lithography remains structurally strong. Looking at the yearly breakdown, the picture becomes much clearer. Over the full year, EUV systems account for a significant and growing share of total system sales, highlighting the long-term trend toward advanced semiconductor nodes. DUV systems continue to play a crucial role, especially for mature and specialty nodes, but their growth is more moderate. Overall, the yearly view confirms that ASML's growth is not driven by a single quarter, but by a long-term shift in the semiconductor industry toward high-ring manufacturing. The combination of high-value EUV systems and a stable DUV base creates a business that is both in the short term and structurally strong in the long term. Breaking down total net sales by NDAs, ASML continues to benefit from strong demand across logic, memory, and installed base management, with services becoming an increasingly important and stable revenue stream. Net bookings activity surged in Q4, reaching over 13 billion euros compared to just 5.4 billion euros in Q3. This sharp increase highlights strong customer confidence and continued long-term investment in advanced semiconductor manufacturing. ASML's backlog continued to grow, reaching nearly 39 billion euros by the end of 2025, compared to 36 billion euros the year before. This backlog provides strong visibility into future revenues. For shareholders, ASML announced a total dividend of 7.50 euros per share for 2025. In Q4 alone, the company repurchased approximately 1.9 million shares for around 1.7 billion euros. Additionally, ASML launched a new share buyback program of up to 12 billion euros, running through the end of 2028. Finally, let's look at ASML's outlook. For the first quarter of 2026, ASML expects total net sales between 8.2 and 8.9 billion euros, with installed base management contributing around 2.4 billion euros. Gross margin is expected to be between 51 and 53%. For the full year 2026, ASML guides for total net sales between 34 and 39 billion euros, with a similar gross margin range and an effective tax rate of around 17%. To wrap things up, if you enjoyed this earnings breakdown, Make sure to subscribe to the channel and hit the like button. It really helps a lot. And if you want to see more earnings summaries like this is the right place. During this earnings season, we'll be covering several major companies, breaking down the numbers and what they mean for the market. Also, feel free to leave a comment and tell us which company you'd like us to cover next. We'll be focusing on the earnings that matter most to you throughout this results season. Thanks for watching, and I'll see you in the next one.